Hey, what's up guys? John here. Foreclosures have been banned nationwide, and the reason for this is extremely disturbing. There's a new foreclosure avoidance option for FHA loans. Here's what it means for borrowers. This will allow them to soon reduce their payments upwards of 25%. Why? Why are they doing this? Out of the goodness of their heart? This came out yesterday, February 26, 10:44 a.m. Then VA home loans. These foreclosures are paused. Why are VA foreclosures paused? Is it because they care about the veterans? Let's look at this. Because at the same time, when there's a lot of stress happening with VA home loans, on FHA loans, on everyday mortgages, they do this. They say that new home sales ticked up in January despite elevated mortgage rates.
Existing home sales rose 3.1% in January to a seasonally adjusted annualized rate of 4 million units, slightly better than the street was expected.
How can home sales tick up when mortgage rates are at 8%, and to buy a median price home in America for $419,000 is almost $4,000 every single month? $4,000. You have to ask yourself, what's really going on? Is this data inaccurate? Is it wrong? Is there something we should be looking into? Because they say inflation is 2%, 3%, 4%, or it's working towards 2%. Is it?
2%.
2% inflation target.
2% target.
The 2% inflation target is key to the Fed's vision for stable prices in the U.S. economy.
Or is it 15% or 30%? Or is it a lot higher than, what we're led to believe? You have to ask yourself why. Why are all these things not making sense? What's the real plan here? What's really going to happen in the economy? Well, in this video, I'm going to break it down for you. I'm going to show you what's actually going on, show you what's really coming, and what you can do to position yourself and prepare for the inevitable. Please hit the like button, YouTube will share the content, educate more people about what's going on in America's economy. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free study session for tomorrow. Take a look at this. So it's very interesting. New student loan payments plan could make it easier for borrowers to become homeowners, allowing essentially people with student loans to reduce their bills to almost zero in the eyes of a mortgage loan officer, so they're not factoring it into their debt-to-income ratio to qualify for a purchase. Now, you look at VA loans, you look at FHA loans, you look at what's going on with student loans, you look at all of these things to mask what's really going on inside of the housing market, and then you start to kind of connect the dots here. So, for example, in Ohio, they're working on, it's not just Ohio as well, but it says no Ohio veterans should be kicked out of their homes, particularly not when they're trying to get back on track with their payments. Ohioans who have served our country and have used VA home loans, the benefits do not have workable options to resume their payments or facing foreclosure. The Veteran Housing Stability Act will keep our promises to veterans and service members today and in the future by giving homeowners affordable options to stay in their homes. Now, is this really about protecting veterans? Is this really about helping them stay in their homes? It makes me wonder. For example, this is the U.S. Department of Veteran Affairs, despite having a backlog of hundreds of thousands of cases, is appropriating resources to provide medical care for migrants, right? So they have all these veterans that are in desperate need. I mean, if you look at how many veterans are on the street right now, 35,574. This is according to VA.gov, right? And this is an increase of 7.4% in 2022. You can imagine that this number is only going up, right? With the cost of living, it's only going to go up. And so you have to ask yourself, how, with this current situation, is all of this money not flowing back to the veterans, right? What's actually going to happen? Well, let's look at this. So it's really shocking. Now, the White House is, at the current time, is also doing the American Rescue Plan. Is Homeowner Assisting Fund has nearly assisted 400,000 homeowners at risk of foreclosure. Though Q2 2023, the state, territorial, and tribal recipients of HIF have expended over $5.5 billion to assist homeowners, a 32% increase from 2023. I thought everything was going to be over in 2021, or at least that's what they said, 2020, 2021. But more and more and more money is flowing in to making this housing market seem like it's healthy, it's normal. It's not. What's going to happen next is going to shock America. Like, for example, millions and millions of people said, we're going to see a Fed pivot in January of 2023. And then in Q2, they said, Fed pivot. last year. Q4, it's coming. Don't worry, one's going to be coming in March. Well, now, no need for preemptively cutting rates. Fed rate forecast, no cuts this year, as high rates aren't hurting. The Fed has no rush to cut rates. Fed Bowman says the time to cut rates is certainly not now. So you have to ask yourself, what's happening? Well, what I believe is happening is they're going to grind Americans to the end, where they are begging for assistance, because right now all these protections are being baked in all over the market, housing market, stock market, everywhere. And at that time, when it's ready, when it's go time, and we start to see more of these business bankruptcies and easy financing source pushes some small businesses into bankruptcy, business insolvency shot up more than 41% last year. Small business in Canada, Chapter 11 bankruptcy filings increased 22% year over year in January. Subchapter, you just start to look at this, you're like, all right, Oregon is giving homeless young people $1,000 a month to get back on their feet. Here's how it's going, right? February 24th, 2 days ago. Then this came out yesterday. Inflation's cooling, but small businesses are still suffering, right? Then Americans can get $500 no strings monthly payments for a year. This came out, last week. And so you start to look at this, and you get an idea of where we're going. Like, for example, the new proposed governor of New Jersey, what he is saying right now is that his campaign promises to include ambitious initiatives like reparations, sanctuary state laws, baby bonds, and universal basic income. A universal basic income aimed to redefine New Jersey's future. And it's not just him. For example, Gen Z millennials could get $1,400 direct payments under a new bill. It came out yesterday. This is Newsweek, right? And this situation, Michigan Democratic representative, has launched a proposed aimed at emancipating minors and those under the age of 30 that will offer them cash assistance for 3 years to help overcome homelessness and study housing with a particular focus on youth. The bill is co-sponsored by Democratic Representative Cori Bush of Missouri, right? And so it says the proposed aim to give them $1,400 or rent as determined by market value to serve the immediate goal of trying to help emancipated minors and adults under 30, as described as Gen Z and millennials, but also use the assistance as a way to study how such help can impact efforts to eradicate homelessness. We can't keep repeating the same policy approaches that haven't ended the youth homelessness crisis, she said in a statement. By providing direct cash assistance, we can address our housing crisis while respecting the autonomy and dignity of the folks receiving assistance. A spokesperson told Newsweek that the proposed program would be national in scope and added that it was unclear when the legislation would come to the floor at this time. National in scope, right? So you follow this. Meet the woman running Sam Altman's Universal Basic Income study to find out how cash advancements can mitigate AI-related job loss. Universal Basic Income is working even in red states. This is what is going to happen. We're going to see a lot of protections continue to go. People are going to say, we're going to have a soft landing, and then boom, it's going to happen just like that. This is all going to start to really come in here. What's helpful about cash is that cash, it can be used for whatever you need. It's really incredible. Economically stable people make better neighbors. When they aren't worried about how they're going to pay their bills, they tend not to come through your window at night. So you connect the dots here and you look at what's really happening, what's really, really going on here. So this, for example, McDonald's saying that an insider reveals McDonald's is no longer catering to customers who make $45,000 a year or less. $45,000 a year. Weren't teachers making $55,000 a year, 5-6 years ago? Like $45,000 a year at one time, not long ago, was a good income, right? Now McDonald's doesn't even target that customer. You have to ask yourself, why? Why is McDonald's not targeting that customer? Years ago in 2007, you can get a combo meal, Big Mac, for $4.90, $4.59. Now some McDonald's are $18 for a Big Mac combo meal. 400% more. 400% more. But what's very fascinating here is the death by 1,000 cuts situation that's unfolding here in America, and how this is doing exactly what I'm saying. In 2007, you could buy a used car for $8,100, $8,100. Now a used car is $35,000, $40,000, depending on your state, right? It increased 500%, right? Then you look at, for example, median home in America, $246,000 back then, $246,000 in 2007. So this is right before the great financial crash, $246,000, right? That's absolutely crazy considering the fact that, home prices have nearly doubled since then. Yet real wages have not moved that much. Then you look at the median rent in America. Back then, a 2-bedroom. This is not a 1-bedroom, it's not a studio, a 2-bedroom, $688. $688. Now most places you're getting a 1-bedroom for $1,700, $1,800. Then you look at, the median family income, right? Today, $74,580. Median income in 2007, basically 60 grand, right? So maybe a 15% increase in income, 15, 18% increase in that range. And yet everything since then has increased 200%, 300%, 400% at the very least. At the very least. But they're not talking about the real facts of what's really going on. But what I think is going to unfold here is we're going to start to see so many headwinds coming for Americans, and they need to be prepared for the chain of events, this rug pull that's about to happen. Now, for example, one of the big ones that a lot of people are not paying attention to is property insurance, car insurance, health insurance, insurance as a whole. Insurance determines values of properties. When it costs a lot more to insure that property, the property is worth less. You have less buyers that can afford to buy it. And when you have states like Florida and Louisiana and California where you have insurance companies pulling out, what's going to happen? It's going to get harder to sell those properties. It's going to get harder for those properties to really justify value. And they're talking about, look at what happened in San Diego, for example, that massive storm, then LA, then San Francisco, then you had Maine, the flooding there, then you have the situations with Hurricane Lee and Fort Myers and all these different situations in Florida. They're talking about a superstorm, basically, that could impact 48 states, like a 48 state storm that they're talking about. So 48 states, right? And when we have a big storm like this and you see insurance go up and you see taxes go up, what's going to happen? I mean, they're talking about, this big affordable housing plan that is going to be really interesting. So, for example, new construction on your home, before I even get into that, new construction on your home may increase property taxes. Phoenix has 2% tax increase. All these different states are working on Leland to consider 70% property tax increase to fund roads. Chicago, like these are 10 pages. Look at the last, call it 7 days. 7 days will Florida property tax be eliminated. Fairfax County budget proposed calls for 4-cent property tax hike, while some King County home values are dropped while taxes on them rose. They're going to start to see this. More and more and more taxes are going to, be levied on these properties, and people need to really be prepared for it. Because what I see happening, according to what they're actually telling us is happening, is it's going to be this. So this just came out. The proposal includes a mix of both administrative and legislative action aimed at closing the housing supply shortfall in 5 years. Under the plan, the administration says it will expand existing forms of federal financing for affordable multifamily developments. This includes working with Fannie Mae to explore the feasibility of making construction to permanent loans, while one of the loan finances the construction, but it also, as a long-term mortgage, more widely available. In addition, Fannie Mae and Freddie Mac are looking at how to expand and better market their forward commitment programs for multifamily development and rehabilitation. The administration also plans to reward jurisdictions who have reformed zoning and land use policies higher scores in certain grant processes for the first time at scale. In another step, officials went to help to fill financing gaps for manufactured housing. The administration says it will also further integrate affordable housing and Department of Transportation programs, including increasing financial support for Transportation Infrastructure Financing Innovation Act programs, projects, and include residential developments. I mean, it goes on and on and on. All these new plans to solve the problem of housing that many people don't realize even exist right now. But one of the big ones is they're going to be using Medicare, the funding from Medicare, to get pushed into housing, to prevent foreclosures, and to prevent evictions. All these things that are happening right now to distract hundreds of millions of Americans from what's really going on in the economy is, temporary. Because soon, when this rug gets pulled, not everyone's going to be able to stand up under it. And if you are really playing the defense right now and you're looking at all these potential pitfalls that are coming, and you're sitting there with cash, you're sitting with stable income, you're sitting there with no consumer credit card debt, because interest rates are going to be higher for longer. And if you're paying a credit card company 28, 30% interest, you're never going to be able to get ahead. Doesn't matter who you are. If you're paying somebody that much money to borrow money, it's going to be impossible to get out from underneath of it. So put yourself in the strongest position possible. Put yourself in a place to where when things start to hit the fan, you can go out there and make moves. The last thing you want to do, in my opinion, is be stuck in one of these situations. Maybe some people might like it. Some people might love it, but not me. And I'm sure you probably want to live your life on your own terms. And the moment somebody else gives you money, you basically are owned by that person, right? So put yourself in the strongest position possible. Next couple of years will be extremely important. If you'd like to fix your credit to position yourself for funding, for maybe business, maybe a business loan, maybe invest in real estate, buying a car, a work truck, we'd love to give you a free strategy session at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow. Catch you next video.